Welcome to Aspen Leading Edge. I'm Patty Roberts from St. Mary's University School of Law, and today's guest is Christopher Chapman. Chris is the President and Chief Executive Officer of AccessLex Institute, a position he's held since January of 2008, and he joined its board of directors in 2012. Welcome, Chris.
Thank you. Glad to be here, Patty.
Oh, I'm very excited to have you on and to talk about some of the really amazing things AccessLex is doing in legal education. So why don't you start, for those who may not know, by sharing some of the services and the research and the philanthropy that AccessLex does?
Sure, I'm happy to. Well, AccessLex is a membership organization which is comprised of all of the nonprofit and state-affiliated law schools in the United States that are approved by the American Bar Association Council on Legal Education. We've been in existence since 1983, initially as a division of the Law School Admission Council, and then in 1993 spun off on our own. And our mission is focused on empowering the next generation of lawyers from admission to law school to admission to the bar exam. And we do that in quite a few ways, where we have various aspects of our operation, all supporting that mission, supporting the students who want to be lawyers and supporting the schools that educate them. And so let me just highlight a few of them. The first item I'd like to highlight is our grants program, which ties into our research program. We have a big operation, an in-house operation, but we also commission outside research through grant programs around our three main focus areas, which is increasing affordability, and increasing the value of law school. And so in our grant programs currently, we focus on the access role through increasing diversity through both research around attracting, retaining, and educating increasingly diverse populations of law schools. And we also focus upon increasing academic success and bar success more broadly in law school. Again, we do that through research to find out what works, what doesn't, and to talk about that. But we also do that through direct programming at schools to aid and supplement their academic and bar success staff in educating their students, preparing them for the bar exam. We also do various professional development programs and various convenings around the issues that are our focus areas. We do an annual meeting around student financial success and student academic success, which brings together hundreds of academic administrators from our member law schools, which total close to 190 schools, and hundreds of those administrators from across the broad spectrum of schools come to that conference. We also provide additional educational opportunities throughout the year in smaller settings for administrators, deans, and others. We also do a lot of operational programs. Our longest running program is called MAX. It's a financial education program designed specifically for law students along their journey. We offer many other programs such as JD Edge, which is a program designed to help incoming law students be ready on the first day of law school. MAX has over 180 schools involved in it, and we just crossed 100 with JD Edge, which is only moving into its third year. So very, very well received and very successful programs. And we have many other programs that we offer and tools that we offer to help aspiring students identify the best law school for them, help them understand financial aid, impact of certain financial aid packages, and the like. And then finally, our biggest operational program right now is our Helix Bar Review program, which again is a nonprofit alternative to the commercial providers of bar review programming. We got into that business because we felt that the programs could be better and they could certainly be less costly. And we entered the program about 5 years ago, or entered the market about 5 years ago, and we've been very successful in driving quality improvements from across the board from all of the commercial vendors as far as significant price reductions. Helix Bar Review for the bar exam, we have had impact across the entire spectrum of law students. On the pricing alone, we believe we've saved students every year more than $10 million a year and due to market pricing reductions in the aggregate. So I'll stop there. I could go on, as you know. So
it's an amazing list of programs, and certainly none that are strangers to St. Mary's. We are a Helix school. We, at least for an upcoming class, and we've had Helix supporting some of our efforts with our bar takers this last year. So thank you for that. I know Helix also has been a title sponsor for our Latina Network Summit since it began several years ago, where we bring in pre-law law student and Latina law graduates who are judges and lawyers. That's a wildly successful program. So I thank you for all that Helix is doing. I didn't realize the cost savings to students from the commercial courses, but that makes a lot of sense. sense once you get a new competitor in this space and a nonprofit one. And thank you for the financial literacy programming you do. It is so critical for our students to understand the costs of legal education and how they can maximize their opportunities. You have your huge scholarship bank people can search. And I was very delighted, and I know our student was, when one of St. Mary's students was a recipient of one of the $25,000 scholarships from Helix. He had done a lot of that financial literacy and JD Edge work, and so I understand they're entered into a raffle, and you give several of those every year. So thank you for what AccessLex is doing for our students. But let's move on to what AccessLex in particular right at this moment in time in legal education is doing for law schools and legal education nationally. You were originally at AccessLex a student loan servicing company. You granted loans and serviced them. That switched. Now you are a nonprofit that does all the programs that you mentioned. But we are at a moment where financing of higher education is becoming more challenging following the recent passage of legislation that impacts financing of higher education. And so AccessLex has been great at helping those of us trying to figure out the best way for our students to handle financing in the future through convenings and webinars. And so let's talk about that. You know, the elephant in the living room is the latest restrictions on student loan lending and the moving of some of that lending into the private market. Please share what's going on, what AccessLex thinks is going to happen, and how we can be prepared.
Sure. Well, there's, I guess, not to understate it, there's a lot that has happened recently in this area, and it will have significant implications going forward. I think in order to set the stage for what was just enacted, I think it's important to understand kind of where we've been. Since 2006, for law schools and other graduate and professional programs, the federal government has offered loan programs for any student who is accepted and shows up at the doorstep of a law school on the first day. The federal government essentially has provided every dollar of loan funding that student needs in order to matriculate at a law school. With the only cap to that amount was whatever the school set as tuition, plus whatever the school determined under federal regulations was the cost of attendance beyond tuition for that student regarding room and board, books, supplies, etc. So in other words, from 2006 until June 30th of 2026, a law school knew that any student they admitted for any program at the law school would not be stopped from attending because they didn't have the money to pay tuition or their living expenses. The bill that just passed, the Reconciliation Act, passed and signed into law on July 4th, eliminates that system. So for JD students, there's now a cap on the federal lending program of $50,000 per year and a $200,000 total cap on lifetime cap on graduate and professional lending, or for professional lending.
If I can just ask, so that $200,000 cap for professional lending, would that include my students' undergraduate debt that they brought with them?
It does not. There's a separate cap for undergraduate debt of $57,500 of federal loans. Sorry, $57,500 for federal loans for undergraduate debt, and it operates completely separately from the graduate cap. You know, I've gotten this question that you can't borrow more than $57,500 for undergraduate, so nothing will roll over.
Got it. So $200,000 for law school and $50,000 a year. Law schools, a lot of them cost a lot more than that. I'm happy to say that won't be the case here at St. Mary's, but I know that there are significant peer institutions who do charge more than that. So what will those students do?
Well, it really is a school by school basis. You know, there are many schools that have sticker prices higher than $50,000 a year. And I think there are a number of things that will have to be done. But the short version is any student who has to pay a school more than $50,000 combined for tuition and or their living expenses will have to access private credit through private lenders. And what that means is that is much more traditional bank lending. The federal program does not underwrite in a traditional sense. You know, there were some ways you could be rejected for federal loans, but they were very limited and very unlikely to apply to most law student. The private sector, anyone who's ever gone to get a loan of any amount, knows that they require gather lots of information from you about your assets, about your income, about your credit and the like. And this will be no different for student loans. The added wrinkle for student loans, for private student loans, is that lenders are having to underwrite you with almost universally underwrite someone who's suggesting that they're not going to have any income for a few years, but they still need this loan and they're not going to pay you back, start paying you back for a few years. So in some ways, it's actually more challenging to be approved for a private loan, for a private student loan than other forms of debt. The other aspect that's different from a private student loan is that there's no collateral here. And so there's nothing for a lender to repossess, and it's challenging.
When I was looking at this a couple weeks ago, I just did a search for student loan private lenders. And I mean, the rates ranged from 4.99% to 14.99%. And interest was going to accrue during law school. And in some instances, payments would actually still be required of students while in law school. I think those of us who are at Access and Opportunity schools who have students who oftentimes don't have family support, financial support, because they're unable to do that. In fact, some of our students are providing that financial support for their families. So I was especially concerned about what happened with the Grad Plus loan. Can you share a little bit about that?
Yes. Well, the Grad Plus loan essentially went away. So prior, the current system now, there are two federal loans available for law students. One is the Stafford Loan Program, which provides $20,500 per year, I believe, of loan. And then if there was still further need, the Grad Plus program provided the difference between that $20,500 and the total cost of education for a student, which I described earlier as the tuition plus the cost of living for a student, which, the cost of living for a student depends on a number of factors, geographic factors. It's more expensive to live in New York City than it is to live in probably San Antonio, for that matter, but certainly more expensive than if you live in a more rural part of the country where a law school is located. But in any event, those tend to run anywhere from $20,000 a year to almost $40,000 a year for just cost of attendance alone. So in this law, capping at $50,000 total will have some serious implications, even for schools whose tuition, falls below $50,000 or well below $50,000. There's a number of reasons for that but one of the big potential reasons where there's an issue is because of the practice of the scholarship and discounting practices of schools, or at least of many schools, where it's highly merit-based and merit-driven. Which that's a shorthand for saying that the best credentialed students coming into a school pay the least, and the least credentialed students coming into school pay the most, at least in broad stroke. And that certainly that allows the law school to probably create a desired class. But in this new environment, lenders will look at that and say, so what you're telling me is your students who, at least in broad terms, are most likely to have the best outcomes as far as bar passage and jobs are paying the least and probably aren't even going to borrow from me, but the folks who have the least credentials coming in need the most money and, historically are the least likely to end up with the high-paying job. And that, as a lender, that sends out a little flag that says, that means I might not get paid back. And lenders like to be paid back.
They sure do. So as far as that's not a change in circumstance, as far as kind of the most credentialed people getting the highest amount of aid. But yes, now it will have much more catastrophic circumstances for our less credentialed students who are likely going to, if they have any sort of credit issues, or maybe they haven't established credit if they're right out of college, likely going to have a requirement for a cosigner and may not have family members available. I know that we, deans of law schools across the country, especially the Access and Opportunity schools, are very nervous about what this is going to do to the ability of our students to continue to enroll in and pay for law school. What are you hearing on the national level in the aggregate, either from law schools and how they might approach this, or from potential lenders or nonprofits who might address these new financial challenges for law students?
Well, I think it's school specific. I think that the core issue that you just described is, and that I've been alluding to, is that someone has to accept the default risk that a borrower has. For the top tier borrowers, where the top tier schools, where the outcomes align very well with the debt students incurred, the lender themselves will incur that. And they incur that through setting of interest rates, through origination fees and the like. But for schools where the outcomes are not as evident aligning with the debt load, lenders they'll require additional essentially backup through a co-signer, which, as you correctly described, particularly at opportunity schools, that is just not necessarily available. And that's not a new thing, right? That's just the world. And they're also, the other way you could do that would be someone through fundraising, through a charity, essentially accepting that default risk by essentially co-signing for students on their own. So those are a couple ways in which schools deal with it. I've talked to one school who's considering trying to raise funds annually to essentially co-sign loans for a lender. It's challenging, right, for anybody. And then the other way I think I've heard is that schools are considering, at least some schools are considering, expanding their part-time programs to essentially reduce the annual cost to their students, or at least allow their students to have the opportunity to earn money and need to borrow less while they're in school. Again, none of these are silver bullets. And I think in order to put together your class, particularly if you want your class to look a certain way and to be a certain size, these are the type of things that need to occur. I think adjusting scholarshiping models will need to be done. That may mean the median LSAT and the median GPA may slip a couple of notches, but ultimately this is a market adjustment that's going to have to occur. And frankly, in the short term, that might have some impact, but long term, relatively, all of your peer schools should be all similar because everybody's going to have to do it. I don't think anybody is sitting pretty now. Some are better than others, because you also have to remember that there's a broader university-wide impact being done by this bill, which we don't have time to talk about today. But I've talked about professional students of a $50,000 a year cap and a $200,000 a year lifetime. The graduate program, the master's programs, both in law school and outside of law school, the PhD programs, those are capped at $20,500 a year.
Oh,
yes, and that will have a significant impact on university-wide for sure.
Well, and we haven't even talked about the impact of the elimination or the reduction in federal grants, which is causing, every day I see several new institutions nationally that are having layoffs and cutting programs, institutions that you and I wouldn't dream of seeing in the news for doing just that. So it's really an uncertain time for higher education. You've seen a lot of changes, and you talked a little bit about how the loan program became very liberal, if you will. You could, whatever schools charged, students could borrow, essentially, since 2008. What's your prediction for how the market adjusts in this particular dynamic, especially in the upcoming several years?
So again, very school specific, but I think broadly speaking, they'll have to adjust their aid. Schools that above the 50,000 in the near term will, if they want to maintain similar class sizes, similar credentialing, they will have to do many things, right? I think they'll have to adjust their scholarshiping to maintain a class size, or they'll have to adjust their class size to maintain their credential. Right. And that's challenging, right? Because law schools have a certain amount of fixed costs, right? And it's easy to say, well, just reduce your class size, but that has impact not only economically, it has impact particularly on schools of opportunity, right? You're cutting off opportunity for folks we AccessLex and most law schools want to expand that opportunity. I'll do a quick aside here. So AccessLex, from a policy standpoint, we've been advocating for various policies around this for a decade. And one of the things that we keep hammering on, and it's this administration and this Congress was deaf to, is that, look, go ahead. If you need to adjust these programs for whatever reason, we understand. But per point of government, the point of the Higher Education Act of 1965, under which these programs are operated, is the best use of government is when the market fails to address an important policy goal of the United States. And I continue to believe, and I think most people continue to believe, that it's very important to expand educational access, expand access to professional school from groups of people who would not have that access otherwise. The market will not meet that need because it is not economical for them to meet that need. And there's a long history of the government stepping in and filling the gap because it is very much in the interest of our country, very much in the interest of our democracy to make use and maximize our human capital for our country, our human capital stock. And I mean, that sounds very, very dry economic, but it's the fact. You have somebody who wants to be a lawyer, smart enough to be a lawyer, and works hard to be a lawyer. We want them to be a lawyer. We want them to be a doctor. We want them to be anything, because otherwise you just wasted human potential and wasted helping our country move forward broadly. And that's kind of the Republican argument that I would make, but it's really the American argument.
Well, it's interesting where I thought you were going to go with that. You're right, of course. Access and opportunity is something that we as a country should want to assist with to maximize human capital's investment back in the country's success. But I thought you were going to go towards the access to justice issue. And it's interesting to me that all of this is happening while we just had the state Supreme Court justices and the Clear Committee talking about how access to justice is such a problem for so many Americans. They can't afford a lawyer. We don't have enough lawyers. And we didn't even talk about the loan repayment assistance or the public interest loan forgiveness, because if they're going to borrow on the front end and they're going to borrow in the private sector, which will be more expensive, and maybe they can get a cosigner and they can get through and they have their less than $200,000 borrowed and they're paying it back. Well, who is going to go and work in our legal aids or our public defender's office or our rural legal deserts? So what are your thoughts about that and how this is going to be impacted?
I think there is some impact, but I think that impact existed even before, right? Look, having income-based repayment and public service loan forgiveness certainly helped. And those things will still exist. Those things will still exist, albeit on the income-based repayment side, a little less generous than it had been for the last 10 or 15 years. Public service loan forgiveness still seems to exist in its current form, although there is some effort to limit certain professions that are out of favor with this administration from participating, but I'm not sure how far that will get. That's still unknown. But I think as far as access to justice go broadly, the broad cost of getting a JD really drives that issue, at least in a meaningful way, meaning that whether it's private sector or public sector, if you get out of law school with $150,000, $200,000 of debt, whether you are an income-based repayment or not, the psychic overhang of that debt is pretty heavy and would drive people, not necessarily drive people to the lower paying jobs, or at least if it did drive them to it, it wouldn't drive them to stay there. So I think the answer, at least to the JD side of that equation, are programs like the program St. Mary's has, pioneering an online-only program for targeted persons in the Valley in Texas, and essentially allowing people to do law school where they sit, especially where they happen to sit as a place that has a dearth of lawyers. To me, the likelihood of those persons staying there is much higher than likelihood of persons who go somewhere else to go to law school and then are expected to come back, because lots of reasons. I think it's virtuous in that many people are probably in that program because they can't come to San Antonio or they can't go somewhere else to go to law school, and I think that is a strategy. The rest on access to justice is, I think, again, and this isn't necessarily AccessLex official position, but it's more mine, is that I keep saying you can't JD your way out of the access to justice program.
That's well stated. Yeah.
Yeah, you have to allow, just like we have nurse practitioners and physician assistants in the medical field, you have to allow non-JD credentialed people to provide certain legal services, because you can credential them at a lower price point, which allows them to work more easily at a lower price point, provide services that are needed and that currently just don't exist in many places, particularly, the legal deserts.
Well, thank you for sharing that viewpoint and explanation of where we are on that. So we've talked a lot about the financing of higher education, how that's changing pretty abruptly this year and starting in July 2026, I think. So our next incoming classes will have to address this financing challenge. But let's look at our final question at legal education more broadly. When I started doing the podcast and I would ask the question about what are your predictions for legal education in the coming decade, I sure never considered that we would have so many changes in just 2 or 3 years. But here we are. And so we're going to do a pie in the sky anyway of what you think the future of legal education looks like in the coming decade.
Yeah, boy, you should keep this and we can talk in 10 years. We can probably laugh about it. I think the biggest thing for legal education is it's going to have to become more differentiated. We have to provide law schools with the opportunity to be different from each other and to innovate and fail. Right now, innovation is permitted, and I give credit to the ABA Council in trying to support that. But everything is so incremental right now. It's hard to adjust with speed, and it's hard to do something that doesn't work. And like in order to really innovate, you have to be able to do something that doesn't work. So I'm hopeful that all of the changes that we're exhibiting, from financing changes, from whatever's going to happen with artificial intelligence burrowing its way into legal education, which it is and will, I think you're going to see a much more diverse operation of legal education across the country, not only with respect to the JD, but with respect to some of those other things I described as different credentials around providing different legal services. I think that has to happen. It has to happen. Again, we talked about the Clear report and the courts. The courts have their views of why there's access to justice. They have their views of why there are unprepared lawyers. They have their views about pro se litigants. And part of it is there just aren't enough lawyers to do that work, and certainly at the price point in which it has to be done. I think there will be looser. They will have to agree to these different credentials. I think they'll have to look at alternative pathways more seriously, even though I think the bar exam will still exist in 10 years and it will still be the predominant source. I think the one size fits all model will just change. One other thing I would say just quickly is on AI. Again, and I don't know any, I'm not going to be so predictive of it, but what I've seen and with any technology is it will change how we educate persons to be lawyers dramatically. Just as much as, when I was in high school, calculators existed and it was under penalty of death that you used one. And my son just graduated from high school, and it was under penalty of death that he didn't know how to use it in his math classes to make his work more efficient and to be able to do higher level activities. And I think something with respect to lawyers will do the same. But what that looks like, I do not know.
It's a roller coaster ride for sure. Well, thank you, Chris Chapman, President and Chief Executive Officer of AccessLex Institute. Appreciate your leadership and AccessLex's leadership in legal education, and especially as we navigate some of these latest shifts in how our students can access a legal education. Appreciate your being with us. And if you enjoyed this podcast and would like to listen to other thought leaders in legal education, please find the Aspen Leading Edge podcast on your favorite podcast channel. Thank you.